Now, seeking alpha is very much a maxim for investing, really, isn't it? Basically, it means looking for an edge, for that information, that little bit of knowledge that's going to give you an advantage in trying to beat the market. It also sort of sounds a little bit like a Pixar movie for hedge funds, doesn't it? Well, according to PwC, if it was, that movie would need to include crypto in there somewhere. A new report says that traditional hedge funds are making bigger and bigger bets on blockchain. Crypto-specific hedge funds, meanwhile, are getting better at making their own bets as well. Why? Well, Anthony DeMartino, CEO of Matrixport, is going to help us try and understand that a little bit. So let's talk to him now. Anthony, thanks for chatting to us. Listen, the consensus of this PwC report seems to be that crypto exposure is growing at traditional hedge funds. 1 in 3 now investing in crypto compared to 1 in 5 a year ago. What do you make of that? What do you think is likely behind that sort of growth?
I mean, when you look at the volatility and price appreciation, the bifurcation of markets and the inefficiencies, these are just absolute super attractive items for hedge funds to try to take advantage of. So it's not surprising that you're seeing hedge funds of all flavors flock to the cryptocurrency space. There's a big rise in delta neutral strategies from almost no focus in the prior year. I think this is an acknowledgement by traditional hedge funds around risk and reward and risk return based on volatility. And I think the asset class, because the risk profile is so unclear, because there's so many different risks that are hard to quantify, and because the ecosystem is so nascent, I think a delta neutral strategy is where we're starting to see a great deal of traditional hedge funds flock. And I would just say from our experience here at Matrixport with our client base, both traditional hedge funds and crypto natives, the focus seems to be a large majority on crypto, on market neutral, even though the PwC reports it's about 30% strategies overall.
In terms of specialization of crypto investments, then are we going to see that going up as well? Is it just going to be a case of actually sort of increasing that exposure, but also focusing resources and trying to find the opportunities within that, allowing for greater focus from the hedge funds themselves?
Well, I think, just how you've seen growth across derivatives and DeFi in the last year kind of answers that question. The hedge funds are getting into the space. They're much less constrained than traditional fund managers, and they're willing to take on the security risks and the protocol risks, and are more apt to be comfortable with self-custody, which is required to get deeper into the DeFi space at this time, and is more comfortable with the counterparty risks of the players in the space who are typically not public. I mean, with Coinbase and Galaxy are the only 2 public companies in the space. Most people don't have audited financials, and the regulatory regimes in which they're incorporated are also not the G7 top tier jurisdictions. So you're already taking on that level of risk appetite, and so to see them go further afield in the crypto area specifically is not surprising.
And what does all this mean for crypto-specific hedge funds then? How does all of this interplay with one another?
I think crypto-specific hedge funds we'll continue to see adoption. I think we'll continue to see allocators look to find more professional, bigger AUM funds that have probably a good amount of traditional traders from the TradFi space before they start to allocate real amounts of capital. I don't, obviously with the market downturn, it's hard to see the growth in 2022 as we saw it in 2021, especially since some of the narratives of diversification have kind of fallen by the wayside, i.e. Bitcoin being an inflation hedge. So I think there's a huge interest in growth. The other thing we're starting to see is big traditional hedge funds, the ones that we would have top 10 in the TradFi world, getting into the space, but very slowly. They're all starting desks. They're all doing tons and tons of research. Much more research than many of these smaller traditional crypto native hedge funds would be doing. So it's hard to tell what the timing is. But these hedge funds are very opportunistic, and with the global macro backdrop and the more recent comments from the Fed at Jackson Hole, the it's hard to escape that crypto is a risk asset, and this isn't the best environment for risk.
All right, Anthony, thanks so much for joining us today.